Cooler heads prevail. This coming from an avowed hothead. That's myself. The Dow on track for its biggest two-day point gain ever. Take a look at the big board. We're a little bit shy of that mark. We need to be up more than 272 points for that to happen. But again, on the heels of a 619-point gain yesterday, we'll take it. Look at what you have been through. We have all been through in just the last week. Triple-digit loss, 1, 2, 3, 4, 5, and then the turnaround. 2 days of triple-digit gains, big-time gains. And take a look at the price of crude oil. Why the rebound yesterday and today? Because the United States is not falling off a cliff. We got the GDP report this morning. Yes, looking backward to the second quarter, 3.7% gain, bigger than expected. Jobless claims down, oil rebounding, oil up the most this year. Why? Because we're not all going to you-know-where. Economist Brian Wesbury is on right now. Is it still time to buy, even with this snapback, Brian?
It is. I still think the market is undervalued in general. Corporate profits are at an all-time record high, and really that's what we're buying when we buy stocks. And Dagen, I think the correction that we've been through, those down days that you just showed, I would call it a technical correction. It's just what markets do. They shift money from weak hands to strong hands. But because people have been so nervous about everything, they keep thinking that when you have a correction, it's some kind of fundamental problem. And thank goodness we got this data today to kind of prove to everybody that there is no real fundamental problem with the United States economy. So I think the market goes up from here.
How much up by the end of the year, you think? We've, even after the gains yesterday and today.
Yeah, now so earlier this year, at the very beginning of the year, we expected about a 16% gain, which would have taken us to 2375 on the S&P 500. It's about 2000, right? Or maybe 1970 right now. I still think we can get over 2250. I think we will close this year at an all-time record high. I think, I mean, it's hard to say exactly, but we could gain 20 to 25% the rest of this year from here on out. I think people got overly scared. The stock came out of the weak hands, and now it's going to be bid up.
Any caveats, though? What is your biggest worry?
Yeah, the four things I watch are monetary policy, right? So is the Fed going to get tight? And by the way, even if they were to raise rates to 50 basis points or 75 basis points this year, I mean, does anybody actually think Apple won't bring out the iPhone 6 if the federal funds rate is at 0.75? I mean, I don't think so. I worry about that. And so right now, I don't think the Fed's going to tighten too far. They'll raise rates this year, but just a little. Taxes aren't going to go up. Government spending and regulation, they're already pretty bad, but they're not going to get worse. We have a divided government. So there's nothing on my radar screen that's really a threat to the economy. China, I'm not worried about at all. China is Japan 25 years ago. In 1989, Japan was the second largest economy in the world. It collapsed. The U.S. did fine. Today, China, basically, it's built on the same model, right? Build stuff to sell to U.S. consumers. If it collapses, we'll do fine as well. I don't think it's any different than Japan. China's rented space in everybody's brain. We think of it and we make it bigger than it really is. And I think we'd be fine.
I said that a while ago, before we even found out really how much slower the Chinese economy was growing, because the language and the talk about China on the campaign trail and just among individuals sounded like how we talked about Japan in the late 80s, where Japan was going to come and buy everything we owned. They were going to buy every building in New York City and slap Japanese names on them, and you started to see the same rhetoric and you started to see the same fears about China. That being said, though, is there any sector that you stay away from here based on weakness there or potential weakness here that you don't like?
You know what? It's wouldn't be because of Japan or anything else. But one of the things that people have done is they've they've bought safety, you know, so they want to buy utilities and telecoms and consumer staples, and they've bid the prices of those stocks up, those supposedly safe stocks, to levels that now make them kind of dangerous. You're paying a lot for that so-called safety. I actually like I actually like technology. I love financials right now. The Federal Reserve is making $90 billion in profits, and they're giving it to the Treasury every year. If they actually raise rates and start paying banks more for their excess reserves, that $90 billion can come away from the Fed and the Treasury and go to the banks. I think bank profits are going to go through the roof.
All right, Brian, 2250 on the S&P, you say?
Yep, exactly.
Okay, I did my math because I'm a dork and have a calculator.
Yeah,
it's about 13.5%, 14% from here. So we'll.
Yep. That is actually conservative. So.
All right, double thumbs up from me, Brian. Good to see you. Thank you so much, Brian Wesbury.